Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, right across the board, the markets were whipsawed after Thursday's US data came in quite surprisingly to the hotter side after the US data showed that the labour market still appears to be running relatively hot. That is, after the release of the private payrolls data jumped by 497,000 in June, the biggest monthly gain since last July, and more than twice given by the forecast of 226, with the previous release seen at 267,000. With that being said, the ADP's report doesn't always correlate with the official Federal Reserve job report, however, sometimes viewed as a proxy for overall hiring activity. In two other separate reports, the US weekly initial jobs claims rose in line with forecast, however remained under 250,000, while the JOLTS report that shows job openings fell more than expected by 9.8 million. Still to come is eyes on the US jobs data, which is the non-farm payrolls report for Friday, with the forecast holding around 224,000 jobs added. However, if we see a stronger number, this will follow suit with the others and therefore heighten the odds that the US Federal Reserve will likely raise rates in July. So looking at the Australian dollar, we can see the market has fallen further away from that key point of 60-day moving average, or the simple 60-day moving average, and now looks closer towards the downside target around 65.40 and reassess from there. Viewing the top side, resistance comes in around 66.5. Interesting to see, the market did tumble towards the lows of 108 on Thursday, but rebounded in front of that key level, which is seen around 107.70. It is viewed, though, that the market likely to press further to the downside, given the technicals are quite heavy and the trend is supporting to a bear case. So therefore, should limit the upside, and we still remain focused on this downside move that was supported by the measured move from the diamond formation. Reassess from 107.70 as profit taking may actually come back into play. The dollar yen, well, the market eventually broke down, and as we can see, it's very much closer to that 143.65 trend line. We're not quite out of the zone to support a bearish case as of yet, with the technicals remaining somewhat negative, married up together with the RSI MACD. Therefore, may see another challenge to that downside of 143.65. Do take some notes that a break here actually would give a further drop and see around 140.5, a big drop. So the key point at 143 is the level, that is at 143.65. And if we do see a bullish response, then 145 comes back into light. Sterling edged higher, as you can see the whipsaw price action, and still maintaining underneath that level of 127.65. Now, while that is intact, I still hold the call down towards the region of 125. But a break above 127.65 will give further height to the upside and maybe put 130 in focus. Gold was heavy and actually posted a very much weaker close after the last 2 days. Still looks to that key level of 1,906. A break there would give further indication to the engulfing candle and therefore look towards the broader target, as I'm still viewing at 1,850. Any upside attempts still finds resistance roughly around 1,928 to 30 as a key point. Wrapping up with oil, well, a very whipsaw price action, but posted a dragonfly doji that supports further upside potential. That is in the short term. Although I don't have a very strong call outside 65 to 74 as the parameters locked in and been now for since April, that the dragonfly doji could see a move to 72, 80, 85 and then reassess from there. Well, that's a wrap for the week. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.